The Web3 space is still very new, and because of that, we have a ton of different projects constantly coming out on a bunch of different chains. You can typically view these new crypto projects as companies. They have a typical brand, they might have some sort of product, they have a target market, cash flow, everything that a traditional Web2 business has, but they're simply in the Web3 world where they might have decentralized applications, smart contracts, and tapping into new market opportunities that don't exist in Web2. One of the important things to note about getting into these new tokens is that it's a lot less regulated and standardized as an industry. Because of that, there's a ton of different opportunities to get in early at the ground floor, but at the same time, there's also a lot of risk because things aren't as regulated and there are a lot more anonymous or bad actors out there. Now, what's really interesting about the stock market versus the crypto market is, let's say there's some sort of company and they want to do an IPO, an initial public offering, and now get listed on the stock exchanges. Well, what's interesting is most of the time we can't actually participate as normal investors, and instead you have all these major investment banks, hedge funds, whatever you want to call it, being able to get in on the ground floor. And then when it actually goes public to the average Joe like ourselves, you're going to not get nearly as good of a price as they did before the market opened. Now, what's really cool in the crypto space is a lot of times these tokens will have public sales where anyone can get into them regardless of who you are or where you are. And it's actually one of the coolest aspects of crypto is that you have this public and globalized fundraising type effort. Sometimes for these sales, there may be some whitelist requirements or other things that you need to have in order to actually participate. But for the most part, you're going to be able to participate in a lot of the different sales out there. Another thing that I had mentioned previously is that because it's super unregulated, you have to worry that a lot of projects are simply going to rug, which means they take your money and run. They're either going to fail or a lot of times they don't actually deliver on what they promised. So it's important to try to find projects that have already had some deliverables or already some sort of working product out there. The last note that I want to make about the crypto market in particular is that it's still very much so an attention-based or hype-based economy where a lot of the valuations right now aren't necessarily on the numbers of a specific project, but more so on how much hype and how much attention that project has, which is a little crazy, but just understand that's how the space works. Now, getting into these new crypto projects has the highest opportunity while also having the highest risk. And personally, for me, out of all of my investing journey, I've made the most amount of money getting into small or mid-cap new projects and getting in on their sale day one before they actually release their liquidity or get listed on some sort of centralized exchange. To cover this a little bit further, getting into their sale or their initial release has a lot of opportunity. If you can properly evaluate or analyze a project in the sale phase, you can sometimes find these different sales that are well below fair market value. For example, if a project token sale price is set at a $10 million market cap, but you analyze it and compare it with a lot of other projects out there, and you think it should be worth $30 million market cap, sometimes you can buy in day one, and then after the sale, make an easy 3, 4, or even 5x. Another thing that I want to say about these early token sales is that if you were right about the long-term potential, a lot of times they can get listed on major centralized exchanges. And whenever this happens, there's a huge increase in price simply because a lot of people don't know how to actually use decentralized exchanges to get into these tokens at the ground floor. And like I had said previously, just be aware that a lot of these projects do end up rugging and not fulfilling their promises. And that's why most of the time I get in and I get out pretty quickly when it comes to these different opportunities. Every single crypto token or project out there has a tokenomics paper as well as how they're actually going to do the sale for their token. And it's actually very important to understand how they do the sale and how the tokenomics are structured because that's going to have a huge impact on the price. Just to kind of explain tokenomics a little bit, which I'll discuss in a later video in this series, it's all about the economy of a specific token, how many new tokens are going to be coming out, how many tokens are started off with, and the utility that they're actually giving those tokens, as well as the distribution of where these tokens are going. The typical workflow of a project that is trying to do a sale is they start their socials, they build up some sort of brand, they then start a dApp or a decentralized application or whatever product they're trying to do. If they do things right, they'll usually have a test net where you can actually engage on their socials and test net. And a lot of times in this phase, you'll be able to get whitelist or allow list or be able to get access to their future sale or at the very least some sort of airdrop. After their test net, they usually go into their mainnet phase where the tasks that you're doing are actually on chain chain and their product is live with real money. And once again, this is a lot of times how you can get points, which will give you an airdrop in the future, which a lot of projects are currently doing, especially the larger ones. Then after a period of time, after they get a lot of people to use their dApp, rack up points, whatever the case is, they'll either do an airdrop, which gives free tokens to all these different users and not do a sale at all. And then they'll personally add the liquidity onto a centralized exchange or a decentralized exchange. But for the most part, if it's a smaller to mid-cap project, they will have some sort of token sale, which there are usually different structures for. And then a lot of times they will have some sort of airdrop or community incentive on top of that. One of the most profitable things that you can actually do is get into some of these small and mid caps when they first launch. And if they end up actually getting listed on a major centralized exchange, that's where you can make a ton of money, like I had said earlier, simply because you're opening up the market to so many more participants and so much more legitimacy when this happens. My main strategy for getting into these new projects is to most of the time just flip them or swing trade them. A lot of these projects fail. I would say the failure rate for new projects is above 99% if you look over the course of a year, which is absolutely insane. And that's why I typically analyze new crypto token sales. I'll determine based on the tokenomics and what I'm seeing if I think it's undervalued or not. I'll typically buy it and then I'll sell it within the first couple of days, or I'll look for a swing trade opportunity where I know they have some sort of major release in the future and I know there's going to be a lot more eyes and potentially liquidity or buys going into the token at that point in time. And that's usually when I'll exit. And a lot of times I'll simply rotate this liquidity that I hopefully made a profit on, and I'll put that back into some of the major coins I believe in, such as Bitcoin or Ethereum or Solana, something that is going to track the overall macro market. And then whenever I see a new token sale coming out that I'm really bullish in, I'll sell that Bitcoin, Solana, whatever the case is. I'll put it into the new token, and then I'll just keep doing that over and over again. It's very rare that I'm actually holding something very long term that's a new project, simply because they haven't proven themselves yet most of the time to actually have some relevance and be here in the long run. Now, there are some larger projects that'll do some sort of massive airdrop and they won't do a token sale. But the problem is because they're not doing a token sale, they usually give themselves 30 to 50 or even 60% of all the tokens. And a lot of time that sell pressure ends up being way more costly for us as an investor than if they had just done a token sale. And that's why a lot of times these low float tokens end up performing pretty bad in the long run and aren't good holds. And this is what we're seeing a lot of, especially over the past year. Stay tuned to my future videos. I'm going to break down tokenomics as well as what I personally do to analyze, and I'll see you guys on the next one.